Good evening, Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Thursday, and this is the 12th of November, 2020, and believe it or not, it's 7:30 p.m. I've been going at this since 3:30 this morning, so it's just the way my life is. And I love what I do, so I don't complain about it. Here's where we're at in the marketplace. You're at the area now where COVID has come back to the big cities like Chicago that I live in, where we've all been asked to go to 30-day voluntary shut-in. If we don't do it, they're going to put a mandatory one on. The runs on the store, it's begun. You can only buy X amount of toilet paper now. Hand sanitizers are gone again. Paper products out the window. The lines are insane. So the panic is back just the way that it was before. And I mean just the way that it was. So going to an office downtown isn't going to happen. Riding a bus isn't going to happen. There's nowhere to go if the mayor says she doesn't want you to go to work unless it's an absolutely necessary for the economy. She's given a number, a 311 number. You call up the city. If your employer says, hey, you want to lose your job, you're supposed to be here over this. Call him in. He's got a huge problem. You can imagine what this is going to do everywhere, and it is out of control. I live here, and it's terrible. The hospitals this close from being overwhelmed. I hope it doesn't happen. So, in the market, and that's why you got a sea of red, which side of the coin do you want? We have a vaccine that is at any point can be approved. We don't know when that'll be and deployed. We do know it won't be enough time to stop this wave of COVID that is here. You're never going to be able to inoculate enough people to stop that. You might be able to do it in the hospitals to help the workers, but that's not the general population. My age group, forget. You know, there's going to be a lot more deaths. They're estimating between now and the end of the year in Chicago alone, another 1,000 deaths, 400 minimum on the current scale. Could be 1,000 or more, depending on if people listen to what the mayor said. All right, so which side do you want to bet on? Do you want to bet on the COVID's going to solve all that and this is the buying opportunity right now? Or is this the selling opportunity because you don't have the COVID yet, we don't know when it's coming out, and everything can get very ugly, giving you what's going on. You know, we filled one gap on the chart right here, and we've gotten very quiet in the tech sector. What is the pattern of it? No trend. You have a higher high, lower low. That is not a trend. A trend would be lower highs, lower lows, or higher lows, higher highs. You don't have one. What we do have is upside bias because the market has stayed over the 18-week average of closes, and I define bias as where is price in relation to that moving average. You don't have to agree with me, but that's what I do. I then look at Bollinger Bands because they're an algorithm that'll keep the market trading within them 95% of the time. And admittedly, I have different rules than John Bollinger, who created this, and what a great piece of work he did. I've met John, I've got a book from him. I used to have TV shows and interview everybody from the Joe Granvilles, Robert Prechters, you name it. I did it all over just before CNBC came about. It was the old, I think, FNN, and I had a half-hour stocks, options, and futures show every week, and believe me, I'd have all the top names flying in, and I'd interview them with a live audience. It was a lot of fun. So I'd learn, and I'm like a sponge. I love to learn. So as I learned what was going on, first time you hit these bands, I came up, hey, 95% of the time, why am I hanging on? Then I started expanding that, and you play with it. But the first time you hit it, that's where pros often take money off the table. Now you'll say, what's a pro? It could be an algorithm. It could be a guy like me that's been around 5 decades trading. It could be a young kid that's already made his millions in the market, and he watches this stuff just the way other traders do, and he's great at it. It's all in his head. I have met all types. It doesn't have to be a computer wizard. One of the most successful traders I know is not a computer geek. He's just God gave him a gift. It's unbelievable. When we take a look right here, sideways action. So we'll see where this goes. By the way, I wrote a book years ago called The Psychology of Smart Money. I was watching today, and another of the analysts, I won't name the station, has come out and he did an analysis of what separates the winning traders from the losing, and he went to 25 of the top traders. What do you think we did? It's all in the book. I did this 3 decades ago. There is a difference between you and what these pros do, and that's why discipline in trading is so important. The one thing all these guys have is they are disciplined. Believe me, they are disciplined. They know how to say, I'm wrong, I'm out. You will say, the market's going to come back. I don't want to go into that. Okay, so you have nothing here. You got sideways action, drifting sideways right there. SMH is in an uptrend. So you have a market that's hit its upside targets. It's backed off. It has also gotten rid of being overbought. This chart's still good. Until you take out this 188.37, I say the pros are in there buying this market. Take that out. They'll say, okay, not much left for me there. It's had a heck of a run, but it's still in an uptrend. XLI, now you're in a corrective mode. With today's break in the market, you now have lower highs, lower lows. That's a downtrend. It's countered because the bias is up. When you're over the 18-day average of closes, bias is up, under it, bias is down. Then we have momentum, which is overbought, beginning a correction. So the odds favor this market's going to be under some pressure. It's not in a bear phase overall because it's got the swing line down, but the bias up. In the energy sector, first time you hit the 100-day average and the Bollinger Bands is often an area where market has big trouble. That could be on the downside or the upside. It's where I've learned that smart money comes out and they go, you fight the battle, I'll decide after you figure out what's going on, I'll come back in. Is the trend up? Yes. Is the market overbought? Yes. Is it into key resistance? Yes. Support's all the way back at 30.24, but it can find any in here. Staying over that upper Bollinger Band, the odds don't favor it. If you take a look at yesterday's action, you were over it the day before and the day before. I count each successive day as taking away 1 of the 5% of the time that the market stays over the band. So I gave the market coming in today a 2% chance of staying over it, 98% chance it would fall back. Doesn't mean I'm bearish. There's nothing to be bearish. Is there a time to have your money off the table? And that's what I think the pros said. QQQ is void of trend. You have a higher high, lower low. You had one shot at that upper Bollinger Band. Boom. You didn't take it. Market is punished you. It's fallen back about $17 and you're stuck in the middle of no man's land here. Momentum is flat, bias is up, and you're void of trend. The emerging markets, trader after trader, watch TV all day. I always have it on. Sometimes I have numerous stations on at one time. But when I hear the emerging market, I turn to it. I have yet to see anyone say that this isn't going to be the play for 2021. I hear it over and over from people I very much respect. And I can understand this leg up, but you got to consolidate those moves. So that's what I think you're in. Now, what if you embed? Are we embedding? So both numbers were over 80 today. Let me explain embedding. Both numbers yesterday were over 80. If they were the day before, which they weren't, that would be embedded. 3 days in a row minimum. And then I have a technique that I apply to the market. You didn't get it. You had an overbought market that is staying overbought. It cannot embed now. Not on this current round. Gold, GLD, oversold in a downtrend. You break the downtrend if the market can get over 176.91. That would then give you a pattern, if you look at this, of higher lows and a higher high. Right now, you have lower highs, but you have lower highs and higher lows. That is not a trend. You've gone neutral suddenly. A lot of resistance waiting for the market at the 100-day average of 178.62 to 178.11. The gold miners are void of trend. They got up to that upper band. Don't you wish you would have taken your money off if you were still in that? Look at how much it's fallen from there. That's the advantage of the band. What about now let's get to next chart, TLT. We had talked about, is the Fed going to let this thing just run? So many traders We were knocking on the door of 1% when we've come all the way back to the 0.82 or whatever we're at the close today. And why is this market going up? Let me give you the secret. COVID-19. COVID-19. Nobody knows what's going on. Everybody's scared right here. Rightfully so. If you're not, move to Chicago. I know you don't want to, but go to New York. The streets are going to be empty. Go to San Francisco. It's going to be empty too. This thing, as it goes and makes its round on these cities, be careful. This thing's a monster, and the numbers are bigger than they were the first round. That is what's really the scary part. Yeah, you're going to tell me there's more testing. I agree. 4 times as much. But you're also getting a greater percentage, way greater, of positive tests. We're up to almost 14% now in Illinois. Think about that. FXE, market's fighting to be in an uptrend. As long as you don't get under this 110.40, what is that, 110.45? Yep, I think the bulls grabbed control today, and they'll defend that. Now, let me give you the other side of the story, because it's always two sides. With a pattern like this, if you take out 110.45, you will end up with lower highs and a lower low. But you got to close under that 18-day average to keep it. So bulls have control. The number they don't want to hit is right there. And as I told you, traders, they don't care if they're bullish or bearish. They'll reverse, in my opinion, and then they'll have a stop over whatever the high is here, seeing how far they can push it. The problem for them is you have a lot of support coming in typically at a 100-day average. You could see it before. So you're selling for 28 cents. That won't attract as many, I think, as you would think. The upside's got them probably a bit more interested. As you know, I put out my silver report for you. Now, let me explain what I mean by put out my silver report. If you go to our website, www.iraepstein.com, and go up to the word research, it's there. It's only there for 3 days. So at midnight tonight, it probably comes off. If my day is off by 1, and sometimes it is, it'll be tomorrow. It's certainly not going to be there on Saturday. So the report will disappear forever into the moon. I covered in great detail the weekly, monthly, daily, seasonal price count on both the silver futures and SLV. How do you view it? Just go to our website, www.iraepstein.com. Watch it there under research. I'm Ira. You have a great day. I'll see you all tomorrow.